So here's something that just really grinds my gear when it comes to one of my favorite loans to work with, the reverse mortgage product. And that is when we get crappy articles written. And I say crappy articles is because even though they say they are fact checked and reviewed, the facts of the article are just I don't even understand it. So this article came from Investopedia that I'm looking at here, and it really just starts out into the first category here on the reverse mortgage, stating a reverse mortgage works differently than a forward mortgage. That's a true statement. Instead of making payments to a lender, the lender makes payments to you based on a percentage of your home values. Partially correct, but I can let that pass. Over time, your debt increases. Well, the mortgage balance increases as payments are made to you and interest accrues. Okay. And your equity decreases as the lender purchases more and more of it. Now, I've been doing these for a while and I've done quite a bit of them. And at no point does the lender purchase your equity in the property. You see, yes, you do have a loan balance as you pull money from the reverse mortgage, whether you do monthly payments, line of credit, or whatever. But as your loan balance increases, something's happening on the other side. And that is your home equity or your home value should be increasing, leaving your home equity typically right in the same ballpark from where you originally started. Now, granted, if you have a paid off house, I mean, there's some exceptions to the rule, but just because the interest accumulates on your reverse mortgage doesn't mean that the lender is purchasing or, purchases more and more of it. Basically, it means interest is accumulating, but in the same time, so should the value of your home should be increasing as well based upon average or normal appreciation. Another section here I found that was pretty interesting as well is that it says study carefully the types of reverse mortgages and make sure you choose one that works best for your needs. Okay, that's fine. Scrutinize the fine print with the help of an attorney or a tax advisor. I I always find it's interesting, neither one have licensing in the lending world. I would say if you want to read the fine print and scrutinize and talk to several lenders, I think that's a great idea. But typically attorneys, especially tax advisors, have no experience or not licensed to have a conversation about what a reverse mortgage is and how it could work for you. So I would probably go more in the category, be careful having conversations with people who are licensed in this area to have those said conversations. I wouldn't go to my tax advisor and ask for legal advice, and I wouldn't go to my attorney to ask for tax advice. It just doesn't make any sense. So I'm not a big fan of that statement there. Reverse mortgage scams, which I always like here. Reverse mortgage scams seeking to steal equity of your home often target older adults. Well, this loan is for 62 and older, so that's a true statement there. And people are always trying to scam other people. The FBI recommends not responding to unsolicited advertisements, being suspicious of people claiming they can give you a free home, not accepting payments from the individual for a home you did not purchase. Now, I'm confused by that statement there. I'm not really sure what they're getting to. And I even took a look here at their citation number 4. I went to clicked on the link they had. It takes you to the FBI's main page. And from there, I kind of did some searching around. Did I find some people that have done some bad things over the years? Sure, but I'm not really sure where they're going at from this statement. The whole point of me doing this is just to show that this is not a topic that should be afraid of. It always fascinates me, and when people out here are writing articles on this subject that have no understanding or no idea even what it is. So, anytime you do any type of a loan product, I don't care what it is, get a couple people's opinions in the lending world that you're working with, not from people who aren't even in there. Don't ask your neighbor or your friend that's an attorney or a tax accountant what they think of something if they're not licensed and they don't do this every day. It's always important to have people to give input, but make sure you're getting well-informed, educated input from people who actually know what they're talking about.